Hello and welcome to my weekly update with me, which is Pro Market Analyst at Hantec Markets. Each week I take through key events I believe will be driving your investments in the coming days. Now moving into this week, well, we've had a very eventful first couple of weeks actually of 2019 already. We've had quite a significant, seemingly dovish shift from the Federal Reserve. A lot of the Fed rhetoric coming out in 2019 has sort of pivoted away from the hawkish stance they had throughout 2018. They're now going far more on the dovish side. They're sort of trying to pull the reins on potential rate hikes coming through 2019. Now, does that mean zero rate hikes? I'm not quite sure yet whether the market really knows for sure, but certainly I think that there has been a shift that has started the ball rolling, I believe, on a bit of a dollar correction that we've got going on that may well start to be a theme of 2019. Add into that, you've got the trade dispute negotiations between US and China, I think is another driver of the US dollar. But also those negotiations, if it does result in the resolution of the trade dispute that they have, that has implications across risk appetite generally, and certainly equity markets have felt the benefit of that in the first week or so of 2019. Will that continue to be a driver of markets higher? Big factor, I think, in this week, though, I think we're looking at the Brexit vote. We've got on Tuesday that UK Parliament votes on Theresa May's deal, and the outcome of that deal vote could well be the driving force behind whether she goes back and is able to renegotiate a better deal, or whether we sort of stumble into a far more chaotic version of events whereby we could have all manner of options on the table, ranging from another general election to second referendum to no deal Brexit to even no Brexit at all. So it's incredibly up in the air at the moment as to exactly how this vote impacts on Brexit this week. So in terms of data points, well, I've got a slightly mixed range of data points. We've got a focus on inflation for the UK, Eurozone and Japan, but also retail sales for the UK and US. So a little bit of tier one data point to take focus, but I think still we're looking at the big news-driven events such as Brexit and the China-US trade dispute, which are still key factors, I think. So in terms of FX markets, well, generally speaking, I think the ball is now rolling on a dollar correction, and I think that again could be something that we see developing in the coming weeks. Don't think it's necessarily going to be a straight line correction. I think that the moves that we saw in euro dollar, for example, last week would reflect that. I think euro dollar is pulling higher. Just in not sort of, it's going to be a bit of a truncated move though. In terms of the euro itself, I think that there is a general sort of more settled look to politics in the eurozone as we see the Italian budget, which has sort of been resolved, the issue that has been resolved there. But in terms of data points, we're seeing the eurozone growth data in industrial production on Monday really disappointing, and it's going to be a bit of a sort of a millstone around the neck of the euro rallying, but certainly I think the outlook for euro dollar still remains fairly positive for 2019. Now, in terms of cable, Brexit is a key factor there. How Brexit eventually gets resolved will determine whether you see cable back in the low 120s, maybe even below 120 on a chaotic no deal, or even into the high mid 130s again. And it just depends on exactly how everything pans out. So it really is that uncertain in terms of the outlook on cable. For dollar yen, I think the yen is still driven by safe haven trading at the moment, and there's a fairly positive outlook for yield differentials actually, with the fact that treasury yields are sort of under pressure still. So I think that is a driver of dollar yen lower eventually. Moving on to equity markets, well, the trade negotiations between US and China have been a positive for equity markets in the last week or so. Risk appetite is the main feature there, and you see that through the oil price rallying over 20%, and that is a key driver of sentiment through the equity markets certainly, and I think that's one of the reasons why we've seen the rebound in equities just starting to roll over a bit. We've had a few data points out which really does suggest that the cyclical downturn in the global economy is sort of gathering pace, but certainly that could be paused or even reversed if this US-China trade dispute does get resolved in a positive manner. So that really is quite an important factor there. In terms of indices, well, interesting turning points on these markets. You've got S&P 500 2,600, that's a turning point. You've got the Dow at 24,000, that's an interesting pivot point. You've got FTSE 100 needs to hold the breakout above 6850. You've got the DAX, which needs to break through 11,000. These are all key pivot points on these equity markets, and it'll be interesting to see if they can sort of hold in a bullish sense or not. So commodity markets, well, again, two factors really affecting commodity markets. I think you could certainly argue the strength of the dollar, but also just general risk appetite. General risk appetite has been a bit wavered, improved a little bit, but certainly the strength of the dollar is turning into reverse is a help and a supportive move for gold. So that's why we've seen the gold price sort of rallying back towards $1,300. Can it break out? That's the key question. Big breakout resistance would be seen if we could see the market through 1,300 to 1,310. That is the key level to watch out for on gold. For oil, we've seen the rally. We've seen technically we're now in a bull market for oil, having rallied 20% off the lows. That is really interesting considering the huge declines that we saw recently in the last few months. Certainly the rebound in oil. Can that continue? Now this is the question that markets are facing this week, because certainly the improvement in risk surrounding the US-China trade talks has certainly helped oil price rallying, as have the moves from OPEC and the compliance that seemingly OPEC countries are engaging for this production cuts. So that is again two factors to watch out for on oil. Now for key releases this week, well, as I said, the UK Parliament vote on Tuesday night, starting around about 7 o'clock, will be the key factor on Tuesday, and we're also looking at inflation numbers for the UK on Wednesday, and also Eurozone on Thursday, along with Japan. So some midweek inflation data to think about there, and also we've got retail sales for the UK on Friday. And retail sales also for the US on Wednesday. So some key data points to look out for there, but broadly speaking we're still looking at Brexit and sort of the global macro environment surrounding US and China relationship. So I wish you good luck in your trading today and for the rest of this week, and I will speak to you next time. Thank you.